Welcome back to the channel, guys. In this video we are going to be talking all things deposits. Going to go through all information about types of deposit, things to help you save for your deposit, and also a couple of little tricks that not a lot of people know about, so make sure you watch the video right till the end. Right, let's get into it. So what is a deposit? Put simply, a deposit is the difference between the amount you're borrowing and the purchase price of the property. So it's essentially the money that you are putting into the property. So an example of that is if you were buying a property of £100,000 and borrowing £95,000 and you were putting in £5,000, your deposit is £5,000 effectively. Okay? Now, what's the minimum deposit you need to get a property? Well, as of Tuesday the 9th of May, so last Tuesday, there are mortgages on the market now that do go up to 100%, so you don't have to actually have a deposit to be able to buy a property. Now, that being said, 100% mortgages, the criteria is very limited. So it is only for first time buyers. The monthly mortgage payments are capped at your rental payment. So if you're paying £750 a month rent, you can't have a mortgage payment. The mortgage payment can't be more than £750 a month. You have to have been renting for the last 12 months and be able to evidence that you have been renting for the last 12 months. And the overall loan amount is capped at 4.49 times your income. So that basically means your annual salary, times it by 4.49, and the overall loan amount cannot be more than that. Okay, so that is for your 100% mortgages. Now, the other options are your more traditional mortgages where you do put an element of deposit down. For that, the minimum is 5%. So the minimum you can put down is 5% of the purchase price of the property. Now, lenders look at deposits in 5% increments. So in terms of the interest rate they will give you, if you are borrowing 95%, you'll get an interest rate that's at the higher end of their products. If you then go down to 90%, you'll get a slightly better interest rate. 85%, lower still. Once you get down to about 65% loan to value, then you tend to be down the best end of the deposits. Now, the reason they do that is ultimately because of risk. The more money you're putting in, the lower risk it is to the lender, so therefore they will give you a better interest rate. Now, all lenders look at it in 5% increments, so that you won't get a better interest rate by putting a 6 or a 7% deposit down. You'll get a lower payment because you're borrowing less money, but the interest rate will stay the same. So when you're looking at deposits, if you can't make it to the next 5% banding, it may be worth keeping the hold of that money for legal costs, for any work you want to do to the property, for moving costs, decorating costs, things like that. Lenders always look at it on 5% increments, okay? Now, there are other schemes that will allow you to potentially purchase a property with no deposit. Shared ownership is another one. Now, shared ownership is generally, I think, is quite a good scheme. Now, what it does, it allows you to buy a share of the property. So you don't buy the whole property, you might buy 25%, 30%, 50%, 60%, whatever that might be. Now, you buy a share of it and then you pay rent on the remaining share. Now, a lot of these shared ownership schemes do allow you to do what's called staircasing, which basically means you buy a share now, so say 30% now, and then over time, when you remortgage, when you maybe save up some money, you can buy extra increments of the property till in the end you own the property outright. Now, always worth with shared ownership checking what the terms and conditions of it are. So if you can staircase up to 100%, how the value of the share you're wanting to buy is worked out, what the rental payments are, because you've got to remember, as well as a mortgage, you have to afford the rent as well. So you've got two things there to make sure that it is affordable. However, it is a really good option if you are struggling to save for a deposit to get on the property ladder, okay? Another option is something called concession repurchase or gifted equity. Now, these basically mean the same thing, but essentially what it is someone is gifting you equity in the property. So again, for a simple example, if you were buying a property of £100,000 and you'd agreed, maybe say off a family member, they will sell it you for £90,000 at a reduced value, you're essentially getting £10,000 of equity gifted, so you then only have to raise a mortgage for the £90,000. So you don't have to put any money in, because the equity that's already in the property is the lender's security. So there are some lenders, not all lenders will do it, but some lenders will allow you to mortgage up to the amount of the agreed purchase price if it's lower than the value of the property. Again, that's another option with lower payments, with lower deposits needed to be able to get yourselves on the property ladder. Now, if you are looking at your more traditional mortgage where you have a deposit down, it's really important to look at the different ways of saving for that deposit. Now, one of the best options out there at the minute is something called a lifetime ISA. If you're saving for a property at the minute, even if you're saving for retirement, if you don't have one of these, get one. They're fantastic. What they essentially do is they allow you to put money away, and then when you come to buy your first property or when you come to retire, you get a 25% government bonus on the money you have saved. Okay, so the maximum you can put in any 1 year is £4,000, and you will receive a 25% government bonus when you buy your first property or when you're coming up to retirement age. Now, to open a lifetime ISA, you have to be over 18 and under 40. As I said, the maximum you can save is £4,000 in any 1 year, and then the bonus you will get is 25% on top of the money saved into the lifetime ISA. Now, to use it for your first property, you have to be a first-time buyer. If there's two applicants, if you're buying it with somebody and you're both first-time buyers, you can both use it. If only one uses a first-time buyer, you won't get the bonus on both ISAs. You'll only get it on the person who's the first-time buyer. Okay, so really, really important to remember that when you're looking at that. Also, looking at a good other method to look at saving up is different types of savings accounts. With interest rates rising, we're being in a rising interest rate environment at the minute, a lot of savings accounts are paying slightly better interest rates now than they were 12 months ago, 18 months ago. So it's really, really important. Review your savings account, review what your money is being saved in. There's certain accounts that will pay 3% instant access accounts, and as well also look at fixed term savings accounts where you lock some money away for a certain amount of time. They will often pay a higher interest rate. Really, really important when you're locking money away to make sure you still have an emergency fund available if anything comes up in the meantime, because if you withdraw money from the account, you often lose the attractive interest rate that you get there. But really important, it sounds like a simple thing, but a slight change in interest rate when you're looking at saving for a house can increase the amount that you're able to, the amount of interest that you're earning on your savings. Okay, now, really interesting one that not a lot of people know about, and there's not many lenders that do it. There's only one lender that I know that does it. Is you can actually take an unsecured loan out and use that as the deposit for a property. So again, it saves you you don't have to save up for the deposit. You can take an unsecured loan out, and as long as it's not with the lender who you're looking to take your mortgage with, you can then use that as the deposit on the property. Again, really, really important with that. Make sure you can afford it. The monthly loan payments are factored into your overall affordability, so it may reduce the amount you can borrow because you're going to have a loan there, but again, it is a potential option. It is really important when you are looking to get a mortgage, when you're first starting out, when you're looking at what different deposits to put down, speak to a mortgage advisor. They will be able to look at your circumstances, they will be able to go through everything with you. I've been working in mortgages now for nearly 7 years. It is really important to go through your finances. They will have a look at what is the best options for you. They will review your credit file. I'm going to have another video coming on credit files soon, so make sure you like and subscribe, because again, it'll have some really useful information for you in it. But yeah, wanted to do this video to show you about deposits and what they're like, and different schemes that potentially allow you to get on the property ladder with a lower deposit. If you've got any questions, stick them down in the comments. Like and subscribe for more. I'm going to have more videos coming really, really soon, and I will see you on the next one. Bye bye.